What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies, and this week I've got 8 trade ideas to share with you at the very end of the video, so stay tuned for that. If you like these trade ideas and you want more, feel free to join the free weekly newsletter that goes out on Sunday nights with 5 to 10 swing trade ideas. It's linked down below in the description, along with all of our other resources. That being said, let's jump in to the broad market. Moving right into our SPY weekly chart to talk about candlestick structure and location, as we always do. For this week's candle structure, we have a hammer candle, right? Some people call this a hanging man, which is in theory a bearish pattern, but I don't see it that way at all. What I see instead is a lower wick where buyers definitely stepped up and they were able to close here at the highs of the week. Now, an important note about the location of this candle, of course, is that it fully engulfs the prior week's candle, but it did not violate a critical 2-week low here. It actually technically set a higher low from that standpoint. The other thing, obviously, is that we have a new high. So, one time framing does not continue higher on this chart now because, of course, we violated that low. But with the new high, we can continue that moving forward if in the next week of trade we are to set a new higher high and respect the low of this prior week. So to me, everything looks fine. It still looks fairly bullish on this weekly chart, especially with the lower wick, indicating that buyers were able to step up and again close there at the highs of the week. If we check in on volume was slightly higher than the week before, which is sort of, acceptable given the fact that we had a little bit of long liquidation towards the earlier parts of the week. Let's go ahead and drop it down to a daily and talk about some of our key levels to trade against into the upcoming week. What we talked about extensively in the midweek market update on Wednesday was the fact that our balance area here, let's just draw that in, is becoming less and less defined. Obviously, it was very clear when we were kind of up to this point in the chart here. However, now that we've traded up, look above and fail, look above and fail, look below and fail, look below and fail again, it's less defined. So these levels aren't as important. They don't hold as much import on that break anymore as they did on those first go-arounds. So for me, closing up here at the highs is sort of interesting, especially given the fact that the Qs were sort of off, but we'll talk about that when we get there. Obviously, if we move higher in this marketplace, we're just looking for a break into blue sky territories over that 422.82. Now, we've consolidated up here at the highs for a number of weeks now, really. So instead of seeing a deep pullback, right, we can consolidate sideways through time. If you think of it like this, that's your daily bull flag. If we just zoom this out a little bit and do something like this, here's your flag, and here is the pull portion of the flag. So if we go higher from here, typically what you expect is a similar sized move that was the flag pull here. I'm not saying that we have to rocket ship up towards, what would that be, like 450 maybe? That would be the trajectory there, 440. But I am saying that there is some room to move higher now that we've consolidated a number of weeks in this general flag area towards the all-time highs, right? There's nothing inherently bearish about consolidation at the highs. Now, again, I do want to caution you that we are still seeing some divergence in that Nasdaq, which we'll talk about in a moment. So if we do see some downside activity, if this is sort of a fake break to the upside of this sort of pattern that we just discussed, then obviously you would want to see first touch support here at 418 on the retest, the top end of the flag essentially. Again, a little bit sloppy with this sort of fake break 1 and 2 here, but 418 still in play. Anything underneath that, I'm going to place less importance this time around on that 416.15 bottom end of balance and instead focus on that 413.50 because clearly that was what was respected on Thursday and where this sort of rally essentially started from into the end of the week. So 413.50, critical level to the downside. After that, it's of course going to be your lows from in here. We've talked about this for quite some time. That's 410.50. If that breaks, expect some nastiness. Of course, that could coincide also with a trendline support break. We're not quite clearly, close to that as it sits right now. But again, if the divergence between the Qs and the S&Ps sort of drags us lower back into this range, that would be an overall, right, look above and fail. We had this miniature balance here, but overall it would be a look above, fail back into this range. The target, of course, is always the bottom end of the range, which once again could coincide with some of those critical targets that we just mentioned. As the chart sits right now, we're going to play this as a breakout and go since we closed strong sort of towards those highs on Friday in the S&P. So now moving over to our Qs, you can just visually see how different the picture is here. And what I want to illustrate is the fact that the only thing, in my opinion, that could potentially keep the markets moving higher is if we apply the balance rules, right? So we had an area of balance from in here. If we apply the rule that we saw a look below and fail back into the range, now technically we have a very sloppy close inside that range. We could see a rotation to the top end because that's how we play balance areas. And if that happens, of course, that would mean that the SPY could likely move higher towards some of those blue sky targets that we talked about. The flip side of this coin, if this does not happen and play out here in the Qs, and notice we have huge indecision here, whereas in the SPY we saw a full-bodied green candle to the upside there. If that doesn't play out and we don't see that rotation to the top end of this balance here, what we would be in store for essentially is a failure at the back end, right? So we have a breakout, fail on the back test, and now retest that support trend line, likely break it, and move to the top of the gap once again. Some of the lows from on, what would that have been, Thursday as well as Tuesday, right around that 326.18. Anything underneath that, there is still a small portion of this gap to be filled, all the way down to about 324.75. Notice the 50 SMA is tangled up in this area, and we have defended it so far. So I would be very cautious about taking shorts here around this area once that gap fills, unless we fully resolve that 50 SMA lower, in which case the clear target is the next gap underneath down to about 320.71. Now that's, of course, again, if we fail to hold and accept into this overall range. You have the upside targets. If for some reason we take out the top end of this balance, you're just trading towards blue sky levels, whole and half dollars, intraday levels that do form. And likely the sloppiest of them all, we have IWM Russell 2000 and our small caps. What did we say, right? Once we got back into these moving averages, definitely expect some chop. It's been proven to be choppy in the past around this area, and I don't think anything has changed until we can take out essentially this range that we've been trading in. And I would just define the range at this point as something like this. You can see sloppy here in the middle and, a little bounce at the extremes, but as it sits right now, no clear direction. When we're trading in the middle of the range, right, we talk about this on the channel all the time, when you're smack in the middle, there's kind of a 50-50 shot you move towards the upper end or the lower end. And as it sits, of course, with the green candle on Friday, it would look like we want to continue higher. However, again, expect some chop in this general area of the chart. It's not well defined whether or not buyers will clearly step up and continue to push it higher, or they'll get, they'll sell right at that resistance, right? 227, the whole dollar. If we do go higher after that, obviously the extreme end of balance is up there around 230. To the low end, we have this support trend line, which was respected on Thursday. So maybe slight edge to the bulls, actually, given the fact that we are continually putting in these higher sets of lows. So I'll give it to them there. But if it is retested, I would expect it to, again, break sideways through time, again, be choppy through that support trend line, not a clean, break through price action. But if it does go, and again, you see that sideways break and it drifts lower, you have that 219 area and then 215 after that. I'd really want to see that one hold, especially with this sort of double lower wicks down in here around that area. So that would be my sort of low end for the week. And again, higher end up around that 230 top end of the range. IWM signaling some sideways action here. Again, we use this more as a benchmark as opposed to something outright to trade. So if you've made it to this point in the video and you're a mother, happy Mother's Day to you. If you're not a mother, I hope you're enjoying the analysis. Do me a favor, hit the thumbs up button, subscribe to the channel, leave a comment, all that good stuff. For now, jumping into Apple, we have to sort of talk about the rules of balance, right? We fulfilled the doubling rule to the downside here, breaking down out of the balance area. But now the question into the upcoming week is what happens here at 131.17. If we see a rejection off of it, I would expect sideways in this overall range in Apple the upcoming week. I wouldn't expect it to break down below that 126.64 because, as we've mentioned in the past, that was the area from in here we needed to see hold. It's sort of the line in the sand to the downside, especially with that 50 SMA baked in there. I would want to see it hold this upcoming week of trade. If 131 breaks to the upside here, then we're looking at technically a look below and fail back up, up into the range, in which case the top end of balance here at 135 is the target. So 135 upside, anything after that, you monitor for continuation over that level towards that 137 whole dollar, 138 after that, about a dollar zone of just resistance up in this general area of the chart. That would be the best case scenario, in my opinion, this upcoming week on Apple. As the chart sits right now, again, everything hinges upon what happens at 131.17 in the opening, early days of the week. So Netflix is actually giving us a decent balance area to work with as well. If we do something like that, it's clearly defined. We had a look above and fail into the range. Now we're seeing a look below and fail up into the range because we've closed Friday's candle inside. I would say the top end of balance is only in play if we can take out the high of Friday, which is right around 508.50. If that is breached to the upside, trade up towards that 514, in which case I would expect strong resistance because our 200 SMA is baked in there as well. We've already experienced a look above and fail, so I do think that there's some overhead sort of supply, if you will, in that general area who are, people who got long here waiting for break even. They're just going to sell it, and that will provide more resistance at that 514 200 SMA, even all the way up to the bottom of the gap at 518.50. If for some reason the bulls really overwhelm the bears and we move much higher, 50 SMA is on tap next at 523 quarter, we'll call it. After that, probably looking at 531.11, best case scenario this upcoming week on Netflix. To the downside, if we, the other situation is obviously that we remain in the balance area here and we could play ping pong, right? We have an indecision candle that printed on Friday. So again, that's why we're really being patient with the long until we take out that high. If we go lower, your target's clearly just back down here at the failure zone, sort of right around that 493.85 from on Thursday. So Tesla is struggling immensely with its 50-period simple moving average. It's the blue line here. And for the last 4 days of the week, essentially, once it broke there on Monday, it acted as the resistance the entire week, right? So whether or not that will resolve to the upside is yet to be seen. With this large upper wick inverted hammer that printed on Friday, I would sort of have to say I'm looking for it to move lower, right? We tried it 1, 2, 3, 4 times, even had a look above and sort of fail back down below on Friday. It just doesn't look like the buyers are all there to want to move Tesla up and higher. Downside targets on this one are going to be right around that $600 mark, 595 from our recent swing low in here. Anything underneath, I would really just watch out for that 200 SMA and where that will sort of be depending on time of week if there is some crazy sort of slide to the downside in Tesla. To the upside, if it is resolved, that 50 SMA, we get clearance above, we're going to have to battle back up through, I would call it just 710, right? That's our area of resistance from in here, acted as prior support, now new resistance once again. So that will be a critical area after that 750 and 780 to the upside. That's if there's some major catalyst that really moves EVs as an entire sector or Elon Musk says something. But as the chart sits right now, the 50 SMA is the thing to be watching into the upcoming week. So Alibaba is one of our earnings culprits. It's also one of the culprits that is the hardest thing to trade. It just seems like it's gapping all over. It doesn't really have a rhyme or reason to what it does. So because of that, we always sort of advise, only day trades here on Alibaba. Clearly in a downtrend for now, though. Lower highs as well as lower lows. So I would expect it to come into our support closer to 220, the whole dollar, especially with the red continuation candle on Friday. Sure, we do have this lower wick, so maybe pay attention to, let's call it the 223 area as a possible area of support with earnings right around the corner. Again, anything I say here could be blown out of the water on the announcement. So downside levels, anything underneath that, you're looking at 212. To the upside, if we rally up and over that 231 area and the 50 SMA, notice how those will coincide as it slowly slopes lower. Your next targets above are here, 238, and then ultimately the top end of the sort of gap where it maxed out, right around 245, we'll call it the whole dollar. As it sits right now, kind of choppy, expecting sideways to lower in Alibaba. So Facebook doesn't look half bad on this little pullback. The one thing I would really have preferred to see is this gap to fill all the way, or just to print a stronger candle here on Friday. To me, if it was going to reverse off of a semi or a partial gap fill, it should have reversed hard, right? It was showing us that sellers weren't able to essentially take it all the way down to where it should have gone. So, buyers were clearly going to overwhelm. And again, Friday's close a little bit weak there for my liking, but it was fairly close to the support trend line. It filled a majority of the gap. Obviously, sellers showing their hand, not entirely strong enough to fill the gap completely. So taking this one kind of in stride here. If we can move back above and get a stronger close above that 321.75 mark, I would expect sideways to higher here to potentially come up and retest the high end of the earnings gap up, which is the all-time high up around 331.81. After that, obviously blue sky levels. To the downside, if this red candle does result in more further pullback, I would be looking for the gap fill, completely on this just go around down to about 311 the whole dollar. After that, if it breaks, if there's some nasty move in tech, as we've discussed, SPY and the Qs are sort of out of sync up there. If it goes much lower, you're simply looking for the prior sort of high in here to act as support around that 297.50 mark. Again, it would be ideal if we did see the reversal off of this prior swing high, but again, just playing the chart as it lies, this isn't the strongest sort of activity I would have liked to see on Friday here in Facebook. So NVIDIA, fairly choppy here. However, obviously it's clearly above its support trend line. It's above the 50 SMA. One thing I do want to point out, because we covered it in last week's video, is the fact that we had our Fibonacci's on here. We were talking about potentially remaining above that 38.2. Just a heads up, right? We did go to the 50. We breached it a little bit, and now we're sort of hovering between those two ranges. It doesn't really mean, that it has to be a long or it has to be a short. I just wanted to give you an update on where we stand in terms of the fibs. Right now, less bullish obviously than we were in last week's video about it. Indecision candle here after seeing a pretty nasty, move lower, respected the 50, respected the support trend line, but just not as sort of biased to the upside here, probably sideways to slightly up, considering that we saw a higher low form, and we did continue to set a higher high there into Friday, leaving the gap unfilled underneath us. So again, what's that tell you about the sellers? They should have filled the gap. They weren't strong enough, so buyers sort of overwhelmed. If we can take out Friday's high, you're trading up towards 611 the whole dollar. After that, we have 628 the whole dollar. And again, earnings a little bit further out on this one. Caution on swings, but you could see that sort of pre-earnings run up, if you will. That seems to be a theme in tech. Not sure if that's going to happen now that the majority of tech has reported, and it was sort of, let's call it at best. So NVIDIA, kind of a question mark in my mind, slight edge to the bulls. To the downside, if it rolls over here, this indecision doji, you're just looking at support underneath at 570. Obviously, after that, you have the 50 SMA support trend line, which should be used as a line in the sand to remain bullish on this, especially, if we go lower than that, you're giving back this entire rally from in here. This was some pretty, strong and expansion range type candles, and it would just, what does that tell you about the buyers there? Weak-handed, if they're not willing to, or at least, get new longs involved up around these consolidation highs. So to me, NVIDIA a little bit choppy here. The keys are, of course, that 50 SMA and support trend line into the upcoming week. If we go higher, you have some targets mapped out. Microsoft kind of looks sloppy as well to me, just like NVIDIA as we just discussed. Support trend line still intact, 50 SMA still intact. We did move lower to retest that prior high from in here, so I like the fact that that is holding up as support, but this candle here, a little bit sloppy. Into the upcoming week of trade, at least on Monday, I would just be looking for an over the high there. So if we just grab the correct tool, over the high, which would be at, if we just pop that in, 254.27-ish, or under the low to fill the gap underneath us around 251.07, 251 the whole dollar. That would just be the clear and easy trade for me on, Monday or early on in the week. If we take out the high or the low of Friday, just trade in that direction. Obviously, upside targets here would be the bottom end of the gap, which is at 256.50. After that, we have the low end of this consolidation range at 257.60, we'll call it. So some decent resistance in this area. If we can get into it, expect some chop and potential gap fill all the way up to 260 quarter. Wouldn't really, venture to bet too much higher after that on Microsoft. Obviously, if it does go, just look at blue sky levels here. Underneath the low of Friday, gap fill, that fills down to about here, 249.80. Anything underneath, I would really put some emphasis on Thursday's low and the 50 SMA, which are right around 245. Support trend line after that can't really break, in my opinion. It can break, but in my opinion, it would not be ideal to break, considering that if we go lower than that, we're just trading back down into essentially this area of chop in here. And just like Apple, if we're making forward and upward progress in Microsoft, that is not a good sign. And last but not least, the beast, we have Amazon here. Total fall apart this week. Earnings went higher to, top tick the all-time high by a cent, and then we moved sharply lower, right? So as it sits right now, not ideal, the fact that we violated this. We technically set a new lower low. I would be looking for potential retest of the support trend line all the way to it, and then the 50 and 200 SMA, which are going to be coinciding. That, to me, should be a strong area of support. First touch buy. If it goes, great. If it breaks, definitely you have to be right out of that trade, right? It's a right or right out situation. Anything underneath, you have this 31.80 81.82. And from there, you'll notice some ways to fall, right? All the way to the low end of this balance, around 30.28. So it could get hairy to the downside should any of this major support that we just discussed in this general area of the chart start to break down. To the upside, if we get a massive reversal off of that, you're looking at 33.10, we'll call it. We'll round that one up. After that, your major area of contention next is up here at 34.30, and then we'll just go up to 3,500 after that as a next area of resistance. Before we get into these 8 trade ideas, if you have not already given the video a thumbs up, what are you waiting for? Go ahead and do that now. Consider leaving a comment if you've learned something new or subscribing to the channel. That would be fantastic. First trade idea is on eBay, and eBay can be traded 2 different ways, which is why we put it first. You can look for this gap to continually fill. The gap is obviously this yellow shaded zone to the low of this candle in here, right around 62 the whole dollar. Obviously, we had a gap down and a strong reaction off of that 200 SMA. So if you believe in this uptrend, that's a potential long there over Friday's high to just trade further into this upcoming gap. If you're skeptical of the gap down, you think eBay should, go to zero, you're, strongly and firmly biased to the downside, what you could do is wait for a move up to about 60.50, we'll call it 60.65. And if the intraday patterns present themselves, look for a short opportunity there. Or if you want to be conservative, wait for the gap to fill up around 62 and look for a short opportunity there on the gap fill. Because if you look down here at volume, it obviously ramped up, headed into the earnings announcement. So anyone who sort of got long in there and is still holding may be looking to get out at break even up around these areas in here, causing the stock to do something like that. So 2 different ways to trade eBay into the upcoming week. Next up, we have Corsair, and this one is pretty simple. It's just a symmetrical triangle. One thing I obviously want to point out about it is the 50 SMA. It's not so mature. It's very recent in its coming of age. It's only been tested a few times in here, and of course we have a fake breakout to consider. So that fake breakout high is right around 36.10. If we get the true break to the upside, that should be the first place you look to trim. After that, you're looking at this 39.66. Best case scenario on Corsair is it slowly grinds up towards 44. Not saying it does this in a week of trade. I mean, look at this range that we've experienced over the past, couple of months, essentially. I'm not saying it has to do this immediately, but those would be some upside targets should it start to slowly grind higher. You can just trail your stop up higher. To the downside, if it breaks to the downside of this triangle, essentially, just look for the low end of the triangle, and that target would be here, right around 28.50. Next up, we have Lamb, and Lamb is a pretty decent looking touch to a resistance trend line. We always talk about the proximity of time, right? So something like this, you could call that a 3/4 of the distance, right? So closer in proximity, strong move off of the 50 SMA here. If it breaks, you're looking to trade up towards this area, probably 650 as an area of resistance. You can see we have a number of touches and sort of congestion and rejection around that area before we would trade up towards that high, up around that 667, 669 is the true all-time high there. That's a bullish trade idea in there on Lamb. Next up, we have Dash, and Dash is kind of an interesting one. If you want to go bottom fishing, you can. It does have earnings coming up right around the corner. This is one of those trades, if you decide to take this long here at the bottom, again, it would probably have to be over the high, or you'd have to have some sort of entry signal, right? Over that 130, maybe to trade up towards that 50 SMA. But if it were to break down below this sort of low in here, double bottom from in the past, now a triple bottom. If it were to break down below that, you got to be right out of the trade underneath that 120. Maybe you give it a little bit of breathing room down to about 119, but really there's just room to fall because this was an IPO, right? There's really no price history underneath that. Who's to say how far down it could go? But again, bottom fishing play here in Dash. Next up, we have Marine Max, and I haven't really heard of this. I've never really traded it. It's not really something on my radar. Someone mentioned it from the Discord channel, but what I like about this is a strong day one breakout here over this sort of, it's kind of it's not really a cup and handle, but a bottoming pattern here off of the 50, nice pressure cooker top that formed, strong close, right? If we just take a look at, let's go to like a 5-minute, look at the close here on an intraday sort of, move. As the Qs were showing weakness, and even SPY pulled back off of the highs, strong close here in HZO. So something to keep on your radar for potential continuation into blue sky territories here. HZO, thanks for the recommendation in the Discord. Next up, we have Overstock. This one's pretty, it's not the cleanest pattern, we'll say that, but a sort of ascending triangle, right? We have a support trend line intact, touch, touch, touch. You can see it there, and a pretty sloppy sort of trigger point here around that 81.75 mark. You can see a number of fake breaks have occurred already. So again, that's why it's not a preferred setup, but if it were to go, if you were to see acceptance over about 82, I would say trade up towards the highs. I would go to the highest of all of the fake breaks just to see if we can get there and make sort of the risk to reward worth it up there around 88 quarters. So that would be the first target. Anything above that that. I would have to say it would be in here, some congestion, prior support, just a general area of inflection right around 95. So that would be upside targets in overstock. Wouldn't really be looking for this one on the downside. Next up, we have Coke, and this one is a beautiful sort of pressure cooker top from in the past, right? It's pretty historic level here, right around our 54.85, we'll call it. And we can also draw in a support trend line if you're someone who likes watching these as well. Obviously, we're not really near it right now, and we're splitting the difference here between some of those candle lows. But if it were to pull back, maybe you want to get the pullback entry. If it were to go, breakout would sort of be over that 54.85 as we've discussed, and you would just trade up towards essentially blue sky levels. We haven't really traded in that zone for quite some time. If I had to bet and just load some more data here, it would be prior to, the incident that happened over a year ago now. So if we do something like that, yep, you can see that here is the major slide. Your targets above would sort of have to be, I would say there's actually some decent room to run in Coke. There's some decent, overhead room all the way up to about, I would call it 59, the whole dollar. This is just very emotional, right? We've talked about that in the past, how this will sort of act. Could be a slow and steady grind before we get there, but there's just some overhead clearance here in KO. Next up and lastly, we have your EPD, not KPD. And again, very similar situation to what we just talked about in Coca-Cola, a pressure cooker top here at 23.62. If that level were to break, and as we just sort of illustrated here, if we zoom out, not a whole lot of clean market structure from in the past. I would say your first target has to be up around here, around 25. If we just grab the other tool for a moment, that target was right around here, 25.44, right? If we just zoom in a little bit, was prior support, acted as a little bit of resistance, and there's really nothing in between us and there. 50 SMA is acting as the support trend line, so just use that as your stop loss, right? If we break down below that and get some acceptance below, that's your stop. Simple as that. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, whether you liked the broad market, the companies, or the 8 trade ideas here at the end, let me know down below in the comments section. And with that being said, again, all mothers, happy Mother's Day. I wish you all a green trading week, and I hope to see you in the Discord on Monday morning.